Hello and welcome to another episode of the Paytech Show. This week we're taking a keen look at the changing payments landscape in Asia and the ways in which fintechs and banks are now serving SMEs in 2019. So we flew to Singapore and sat down with two of the largest banks in Asia, DBS and OCBC, as well as an innovative financial services company, Banking Circle. First up, our interviewees gave us their take on the evolution of the Asian digital marketplace. What's been changing in the payments landscape over in Asia currently?
We're seeing a lot more partnerships, businesses working together, sharing each other's capabilities than I've seen in the past. That's always been evident in Asia, but I'm seeing that more so than previous years.
Amazing. And how is this shift really affecting the PSP merchant marketplace ecosystem that's so vibrant here in Asia?
So many of these sellers that are selling services on Amazon, for example, they're now looking to collect funds in multiple currencies. So no longer are they just selling on Amazon EU, they're selling on Amazon in the US, they're selling on many different marketplaces globally. So a lot of the solutions that PSPs, acquirers are providing to these merchants, it's no longer about one or two currencies, but it's a suite of currencies. Now these operators, they can either go and build these capabilities themselves, or they can partner with other providers that can provide these additional currencies. And that's what we're seeing today. These sellers, they don't need to have 4, 5, 6 different relationships. They're working with one operator who has all of those service providers connected in to provide the services to those sellers.
They've changed a lot and they continue to change. If you look at where as a society, Asia was historically heavily cash. The progression from cash to moving to digital payments has started, obviously led with China and what they did on the QR. But when you look at what Singapore is doing, what Thailand's doing, there's a lot of singular focus that's coming in on digital payments and about actually solving merchant and consumer problems to bring the story together to it's not just about pushing away from cash, it's about pushing away from cash and actually solving a need or a pain point that exists today. And that is, by calling it a minor change or a large change would probably be understating it by, a large amount.
I think it has been a very exciting time in the last couple of years that we've seen in Asia, because the market is, especially from the regulations aspects for payment, has been opening up. The regulators has started to embrace more real-time payments 24/7. So markets like India, Hong Kong, Singapore in the last couple of years has introduced real-time capabilities from an infrastructure standpoint. Likewise, we are also seeing that from an ecosystem, there's more e-wallets, emergence of the e-wallets coming in. I've checked around, Malaysia has about 40 e-wallets and Singapore has close to 30 e-wallets today. So, which is phenomenon. And by that means that consumers are taking up they have more choices in terms of what they can look at for instant payments, using the e-wallets to pay so that they can get instant fulfillment for their products and services.
So, how are SMEs faring in this changing landscape? And where does the future of speed and efficiency lie?
When you look at Asia, it is SME central, right? The number of SMEs and micro SMEs and different ways to cut it. Everybody's got their own way to cut it. What we're looking at is, hey, do you really want to go up there with 16 different terminals where there's a cashier who's very busy, 45 different things going on for him or her, and then they're trying to figure out where do I put the card, does the color match, when do I tap, when do I not tap? And that's really where we're trying to solve a lot of the problems over there. One device does everything for you.
Cash flow is very important for them. And one of their key challenges is the ability to get the kind of liquidity, working capital that can balance between their sales taking versus their expenses. So as a bank, I think we are constantly looking at how we can innovate to help them optimize their working capital, how we can facilitate their collections as well as payables.
Many of the SMEs are struggling with cash flow, for example. Accessing cash just to manage the day-to-day parts of their business. A restaurant, for example, will have a refrigerator that, if it goes down, it can cost upwards of 10,000, 20,000 pounds to replace. For a small business to access that kind of cash quickly can be challenging. So, basic lending services that many of the banks should be offering to the SMEs it just doesn't happen. And that's where we're seeing Banking Circle able to step in and provide services to help these guys.
In our partner in Nets, we're also looking at QR and putting QR and card into the same terminal. So you can still do digital, you still drive choices for consumers. Merchants don't really care, they just want to get paid. When I go up there and from a consumer perspective, I don't need to fumble, right? I've decided, most consumers have pretty much already decided when they walk up to check out how they're going to pay. It's about making sure that how they want to pay is available on the other side. And that's really where we're going at from an OCBC perspective with our merchant acquiring solutions, whether that's in the online and offline space, and what we're doing with our Pay Anyone app, in terms of bringing those experiences together where we solve actual problems and we move people on.
The recent development from, with capabilities like real time, are opportunities for us to help them, how to work with them, how we can bring in faster cash flows into their business model, right? So things like QR, things like faster payments capabilities, real time 24/7 are things that they welcome, because that can move them away from cash as well as the checks collections.
Why have the banks famously underserved SMEs?
It boils down to risk. A lot of the banks will see SMEs as a high-risk sector. Things like restaurants, hairdressers, gyms. In the bank world, they're seen as high-risk businesses because when you lend against them, there is a higher risk of these businesses failing to repay their loan. The challenge is that you have to look at the way you need to lend to these businesses. So if you just give a restaurant a loan and expect a repayment on a regular basis, these businesses are seasonal. They could be busy one week, quiet the following week, and you need to change the way you lend to these businesses to cater for these seasonal trends. A gym, for example, is busy in January when everyone's got their New Year's resolutions. February, March, April, May, they're quiet again, and they're busy again during the summer when everyone has to runs back into the gym because they want to be in shape for summer. So again, you have to lend to match the seasonality of their business. And that's what many of the banks struggle to do.
Finally, we explored the merchant PSP ecosystem in Asia and how Banking Circle are solving one of the oldest issues in financial services.
Every day there are new marketplaces that's coming out. And in DBS, we had some, maybe to share a few examples of how DBS engaged ourselves into the different platforms of marketplaces for the SME type of ecosystems between C2B or B2B type of ecosystem model. So one example is where DBS jointly worked with the Infocom Media Development Authority as well as the Singtel to create a platform, ecosystem for our SME to go digital. Okay. By that, our SME could go onto such a platform to put up their merchandise and their services where they could sell their services on that platform. This is a way to kind of promote them or help them to adopt digital technology, and so that they can see that their sales model can actually be omni-channel. So customers could buy online through that marketplace, and then when it comes to delivery, they can visit the store, and that's the offline bit. And at that time, and the merchants could actually take the opportunity to do some cross-sell, when the customers visit the shop, apart from just taking delivery of the goods. So that's one area that we see a kind of marketplace to help SME take away the nerves of going into digital. But at the same time, they can see that this becomes an expansion towards the kind of sales model that they can adopt, to help them with their services.
One of the biggest issues merchants face, small, medium enterprises face, is that instant remittance. And obviously with new technologies, we're hoping that someone that, a small business that has been typically kind of had their cash flow in trouble, might start to see that getting solved in the future. Can you tell us a bit more about that problem?
Yeah, I think you hit the nail on the head. I mean, a large portion of digital adoption or digital payment adoption has actually been slower, primarily because of legacy structures in terms of giving merchants their cash. If you look at Singapore, we've launched something here called Corporate Pay Now last year that does instant settlement. And what we've also done is on top of the instant settlement, there's actually a QR code that you can plop in front of in a merchant shop. So I think as more and more of that gets solved, merchants will adopt digital payments much more seamlessly at a larger scale. But today, the thing is, every single one of the legacy networks that have been working on these settlement problems are already working on making it faster, right? It is no longer 3 more days till you get paid. For the most part, everybody's looking at either at worst settling it on the same day or the next day. But there is real-time settlements, and real-time payments is probably going to be the largest driver of digital payments adoption across the region, actually.
And I've got to ask though, in terms of the merchant to marketplace ecosystem, has that still had that instant effect there, or are we still seeing that kind of ecosystem being left behind?
I think the ecosystems are coming, and that's the beauty of Asia, there is no stagnant water when it comes to digital adoption, not only in terms of payments, but also digital commerce. So I think there is a general awareness that the marketplaces or the payment facilitators or whatever you'd like to call them that are in between, they're going to have to start settling faster and giving those funds faster. Some of that is because they're going to actually get paid instantly as well. So it's kind of almost a pass-through effect, and an advantage of that is if you genuinely adopt the system, then it grows together and everybody wins.
So we talked about some of the issues SMEs are facing across the world, in Asia and Europe. How can Banking Circle mitigate some of these challenges?
One of the products that we have launched is instant settlement, which is catered for many of the sellers on Amazon, for example, or many merchants that have delayed settlement from their PSPs or acquirers. So if you're a merchant, you may have to wait 3, 4, 5 days to receive funds from your PSP. Under the solution, instant settlement, you can receive funds instantly. And that is a line that we provide. We take on that risk, and the merchant is able to then receive funds, in many cases the same day, which is transformational when you're managing your cash flows. The same thing applies with sellers on Amazon, for example. Many of these guys are waiting 10, 15, 20 days. In fact, I had a conversation yesterday where sellers have to wait on some occasions up to 70 days to receive funds from the marketplaces that they're selling on. We can provide an instant settlement to that merchant, which is again transformational for their business.
Why is it that these funds are being tied up in these marketplaces, with the PSPs?
Could be a number of reasons. Some of these guys just have systems and platforms which prevents them from settling funds, T1, T0, T1, etc. And therefore they have to wait for their settlement cycle, which could be longer. In some cases, the PSP will just prefer to hold back funds because the merchant, for example, could be riskier, and therefore they need to manage that risk carefully. So there's many reasons why PSPs delay settlement to a merchant, but from our perspective, we want to help that SME receive funds quicker, and therefore we've built this solution, which is a bridge against funds coming in versus funds being paid out to the merchant.
So this is going to have ultimately huge ramifications for the merchant and the small medium enterprise economy. It's going to transform hundreds of thousands of lives.
I hope so. We believe that this is transformational. We're starting with the UK and Europe, and we've been working with many acquirers and PSPs to start rolling this solution out. And in time, we will expand that globally as well. So we believe that this is a transformational solution for SMEs today.
Thanks for joining us for another episode of the Paytech Show. We'll see you next week when we'll be looking at the speed and accuracy of cross-border payments.